All right. Let's give you our levels for this morning and see where the market takes us. We are trading mini S&Ps here. Our pivot this morning is 42.78. 42.78. Support below 72, 65, 60, and 54. Resistance on the upside at 84, 89, 94, and 4,300. Pivot 78, resistance at 84, 89, 94, and 4,300. Support below at 72, 65, 60, and 64. All right, welcome to some of the new guests that are here. We are trading mini S&Ps. We use our levels that we give out, that I just gave out, as setups, support and resistance areas for the beginning of the day. That's like a guide to the day. We tweak those. We can add to them. We can subtract from them. We can adjust them. This is just a guide. There's nothing here etched in stone. This is near trading futures here. So futures trading is very you sometimes have to make adjustments to. There's nothing in as rule. There's guidelines, but there's no rules that you have to. The one rule that we do have is to make sure you keep your stop in place above all else. That keeps us from getting ourselves in trouble and anything that when the market kind of decides to make a move one way or the other, and we're on the wrong side, which is fine because we're not always going to be on the right side, but. Point is that we're looking for about 2 to 3 points on our trades. 2 points is where we're kind of trying to get to. Again, depending on volatility and movement, we could adjust that. It could be more than that, depending on volatility. It could be less than that, depending on volatility. So volatility is the key to traders. We cannot create volatility. All we do is trade volatility. And unfortunately, when the markets are slow, and for a couple of reasons, one is it's summer, and the other it's going up. You have two concepts here that create low volatility. Every time markets rally, seems like they suck the volatility out of the market, and we are at the mercy of volatility as traders. So, but patience is very important. Waiting for the setups. So the first initial set of setups you have is the support and resistance levels. And if you look at the chat box area, or if you have the chat box area up already, you'll see the levels that are imprinted there for you as a guide, like I said, for the day. And in addition to the levels that we give out, you also have price action opportunities that occur, and we have different various price action opportunities that are in the market that can give us opportunities to trade. So the combination of both the price action opportunities plus the levels that we have gives us the setups that we like to trade. Those price action opportunities are taught experience, and they vary with every market day because every day is different. But our goal here is to, in our education courses, to show you the setups, understand what the markets are trying to do, at least initially, and then react to the volatility when it presents itself. And the goal of the course, the education course that we offer, is for you to become an independent trader, find the levels on your own, understand the price action opportunities, and trade them independently of myself. We did start a trading room here to keep us entertained a little bit. Kind of a little selfishness here, as I came off the floor of the exchange when I was trading in the pit. Yes, those things. And it was very, very quiet when I came up to my office. So needed to start something to keep us entertained a little bit, to keep you focused a little bit. And that's what the market does. At least that's what the room does for me anyway. It keeps me focused on the levels. Obviously, when it's moving around a little bit, it keeps me extra focused. But when it's slower like this, you have to listen to me talk more, which is not a good thing. I'd rather talk about the market, but we talk about other stuff here too. So the market's slowly drifting down here, coming down to our blue band here. If you're, again, just trade them with a grain of salt. And just be careful. I mean, the VIX is, can somebody let me know where the VIX is at? Where the VIX got to be definitely the 15 handle, if I'm not mistaken. Anyway, we're coming down here to still at 16. It's pretty impressive. Coming down here, testing our blue band. If you are a blue bander, you are getting a little taste of that, a little rotation higher off of it. Still a 16 handle. It's pretty low. I mean, it's not like it's like 1598. Oof. There you go. 1598. Not surprising. All right. So let's see what happens here today. Again, patience is important. Our first support level is down at the 72 areas. The market slowly downticks here a little bit. And we'll see where the market takes us from there. All right. Again, we use the levels as a guide, and we are trying to scalp the market for about 2 or 3 points, depending on volatility. Obviously, when the VIX is a 15 handle, things are very, very slow. We like the VIX in the high teens or up lower 20s for sure. That gives us a lot more opportunity, right? I mean, that's what trading's all about, is opportunity to trade. And sometimes we have it, sometimes we don't. So that's just the nature of the beast here. And you have to remember also that we are at all-time highs, and consequently, all-time highs mean that you have to be very careful and use your stops. And because we don't know when there's going to be some added, volatility that enters the market, that these stops get triggered and what have you. So be a little bit mindful of that when we get up to these new highs up here. All right, so market slowly down ticking, a little support down at 72 area. See what it wants to do when it gets down there. Let's see. Let's see if there's any numbers that are going to be released this morning. This is unemployment week, right? I mean, the end of the week is unemployment. So that should be interesting as we slowly drift down here. Bonds rallying a little bit. Let's see, there's a couple of Fed speaks later on today, but nothing, no numbers coming out. No numbers coming out. All right, the market continues to downtick here. We're looking at support down at the 72 area. Over the weekend, the Financial Conduct Authority, the United Kingdom's financial regulators, barred Binance Markets from Britain. It's one of the most noteworthy moves by a Western regulator to date, and follows a recent crackdown on crypto mining in China and elsewhere. Binance Markets is affiliated with the world's largest cryptocurrency exchange, Binance, but is no longer permitted to undertake any regulatory activity in the UK. That doesn't bode too well for the crypto people, as they are continuing to have a little bit of an issue getting, those states, these countries, I mean, are putting pressure on them to, well, putting pressure on them, period. So we'll see where that takes, where that goes. But that's why the crypto is as low as it's at. As the market continues to slowly downtick here, support down at the 72 area. All right, working a little support area here. See what the market wants to do against it. I mean, keep your stops in place no matter what. This is like news. So all of a sudden, we're getting a trade this early in the morning. Well, I mean that's the work that we have. We kind of show you where we try to find those support and resistance areas for you, and we show you why they would work. We are always making sure that you have reasons to trade more than anything else. We need to have reasons to trade, so we kind of show you where those opportunities lay and why a level would work and why a level wouldn't work, or why we have to adjust it. So all of that stuff, as far as deciding what we should do with the level, or how to create it, or how we have it, is all based on the education work that we do. Good morning there, Hakeem. What do I think of MS? What is MS? What is that? Morgan Stanley. What about it? I don't know. I'm not a stock person here. This is not we're not trading stocks here. We are trading mini S&Ps. We are trading equity futures, not so much so the stocks. So, all right, market continues to downtick here as we have to keep our stops in place. That's why we have our stops. That's okay. As we continue to downtick here, we hit into stops. The market continues to go down. We got next support level down at the 65 area. Our next support level is down at 65. That's why we talk about keeping your stops in place. We never know when there's going to be some added dynamics to create some volatility in the market. Well, get to that in a second here as we continue to downtick here, looking for the 65 area. Okay, we got down to 66 and change there. All right, that kind of ran through to 72 and right down to 66. We're looking at 65 next. Let's see. Okay, perfect example why we do keep your stops in place. We never know when the dynamics of the market change, and all of a sudden you're going to hit some stops. And this was a perfect example of hitting your stops. You got to keep your stops in place so that these situations don't run you over. All right. So, how do you prepare yourself mentally, emotionally pre-market? Well, I mean, the one thing that I've gotten to understand over the years is that I try not to have expectations as to what the market might or might not be doing during any day. All right. You always are prepared for to trade, but we never know when there's going to be an adequate amount of volatility or an adequate amount of opportunity to trade. And so, consequently, you have to mentally be ready to uh, for anything. So, my expectation is to have no expectation every day, and come in with that attitude. At least it keeps me ready to that if we do get opportunities to trade, we'll be ready for it. And if not, that's fine. Also, we never know when we're going to get some volatility one way or the other. So you always have to be prepared to adjust to it. Obviously, here we are mindful of volatility, and we're like today, where all of a sudden we're starting to break, which we never was the biggest break we've had in a while, right? And you have to be prepared for that. Sometimes it's easier than other times, but we never know when this is going to happen, right? I mean, that's the one thing that as a trader, you just never know. You just have to be prepared to take on volatility when it presents itself. Sometimes you know it's going to be there, like you are very busy overnight and there's news that comes out, and so you can get yourself prepared for that. But other times, we are not privy to volatility. I mean, we don't know what volatility is going to create for us every day, or not create for us. So that's the one thing that we have to be mindful of. So I would say that be patient every day. Come in with an open mindset. Don't have any preconceived notions as to what the market's going to do or not. All right. Every time you think I come in with the notion that the market's going to go up or go down, I'm usually wrong. And then the worst part is that you have a bias for that day, and that creates a little problem as far as trading is concerned, because you are trading that bias all the way through, and it becomes a little bit of a problem. For traders when you're trading a bias instead of trading the market. So, no bias, first thing I would say, and have expectations for nothing and expect everything. Okay, get ready for everything, because you just never know. You're basically going to battle with computer programs. You are these high frequency trade groups are out there. Everybody's out there doing stuff. So you have to be prepared for anything, and when you're trading. And again, sometimes it's easier and sometimes it's not. That's all I can say. That's for sure. As they say, in this business, this is the easiest way to make the hardest way to make easy money. Sometimes it's the hardest way, period. But this is the business we're in, and as long as you understand the concepts and ideas, then you should be okay with it. As long as you find something that works for you over a consistent basis, and you've seen it work, and you understand it, you understand why it works and why it doesn't work, then you can always adjust your trading accordingly. Market is on the lows here, trying to figure out what it wants to do. We are a little bit of pressure this morning. Bonds on a rally mode. I don't know if we're getting inverse trade all of a sudden or not, but last couple of times that we were trading, we felt we kind of saw that. I don't know if that dynamic is back or not. That I can't tell you. Only time will tell. As we continue to downtick here, looking at the 65 areas, the next support level. All right. Let's give you some more talk here. So you see that the the cryptocurrency is getting a little bit of pressure here from all the regulatory agencies of all the nations, and that's why it's under a little bit of pressure these days. Let's see what is it doing today? It's up a little bit. Bitcoin, that is. It's up a lot, actually. So let's see. The major averages are hovering close to record highs after the S&P notched its largest weekly advance in February. Traders appear to be growing more confident in that U.S. inflation trends are not a sustained economic threat, or maybe disregarding the concerns altogether. At the time of this writing, the Dow is up a little bit. Now it's down, as you can see. Bigger picture, some market participants expect a quiet week. I had a latest jobs number on Friday. The report is expected to show the economy added 683,000 jobs in June. That's the number that you should be kind of geared on. The non-farm payrolls number is the number that the market kind of likes to trade off of. So 683 is the number we're going to shoot for. And the next piece of data that will shed light on wage inflation and workers' shortages, and as the pandemic era unemployment benefits taper off in some states. Trading volume could also be lower in the coming sessions, with many traders taking early vacations ahead of the July 4th holiday weekend, which is another reason expectations have to be thwarted just a little bit as to how much activity you're going to get, right? Unfortunately. On the infrastructure front, President Biden walked back, clarified a declaration made last week that he would refuse to sign the latest 579 bipartisan bill if it did not come with a reconciliation package. As opposed to the first measure that focused on physical infrastructure, the second bill would include funding for issues such as childcare, healthcare, and climate change, and what the administration feels is called human infrastructure. All right. So we'll see what happens there. Obviously, all these things affect the markets in some sort of way, right? I mean, you would tend to have some expectation what the government is doing is going to affect our markets, and the policies that come out of Washington create volatility in the equity market as a whole. Well, remember, this is the equity market. It's not any one stock. We are trading the equity index, which is in our situation, the S&P 500, but the mini, because the big S&P traded on the floor only, which is not there anymore. And it was also 5 times the size as this contract. So All right, market is coming back up here a little bit. See what it wants to do. Again, took its time, got down to 65 and change, and did not get down to 66 and change. Yeah, 65.75. That's right. So got all the way down there to that level, and bounced off. So kind of missed our entry point by just that much. I mean, we like to scale into a level. So our levels, if we have 65, some of our traders maybe got the 66 area, which was nice. I mean, you either scale in a point above and below a level. We're not going to be perfect. You can scale in a half a point above and below if you're more risk averse and you just want to take the level itself, then you're looking at 65. So all of those put together create an opportunity to get into a level. You scale in. We also scale out at the same time. And, so if you did get in at 66 there, you're getting a nice little rotation back up here. Give you another chance to buy it down there when it went back down. Again, not necessarily depending on how you're trading and what risk tolerance you have. And remember, everybody here has different risk tolerances. Everybody gets in differently. Everybody trades differently. Not one trader here trades the same as the other. So the way you get in and the way you get out is a personalized situation. And that's why when people ask me, "Oh, what did you do today? How did you trade?" I can't tell you what everybody's doing. Everybody trades differently. I understand that more than anybody else. I mean, I stood around a lot of great traders. And I could never do I could never trade like some of my other compadres used to trade, and they probably can't trade like I trade. So you have to find your own unique style and then learn how to maximize those profits around it. And that's what we're here for, to help you to find that and understand what the market's doing for your unique risk tolerance, and then take advantage of that when it happens. All right. We're coming back up here, slowly drifting back up. Resistance right now would be around the 73 area. 70, yeah. Or just let's wait till we can see what it wants to do, if it's going to rotate back up here or not. That we don't know. All right, so we got down at 65.75. Unfortunately, for some of you who scaled in at 66, you're going to get paid off. Nice little buy. And for those of you who have 65 and a half, you obviously did not get filled. So consequently, right now at this point, the 65 level is pretty much not as strong as it was like 10 minutes ago when we got down there, unfortunately. So you have to make that adjustment and probably think about, if depending on what risk tolerance you're talking about, maybe canceling it here a little bit. And if you're more risk averse, looking for the 60 area, which is the next support level on the downside if we get back down there. Well, the market continues to uptick here. All right, if you did hold on, or if you got a nice rotation there off of the 65 area, 66, I should say, you did okay. Again, you have to tweak your trading a little bit. You have to tweak the levels a little bit depending on the price action and depending on your risk tolerance. So those are two concepts and ideas that have to be thought about, included in your trading when you're trading. Those are ideas that you have to tweak and adjust to your trading style. Anybody have any questions? Feel free to put them in the chat box area. That's where we have my chat up, and I could see them. And if you have any questions, put them in there. If you missed the levels this morning, if you look at the chat box area, if you bring it up, you'll see the levels that are there for you. And those are the levels, like I said, we use as a guide for the day. And we can adjust those. We add to them, subtract from them, all of those depending on volatility and price action. And like I said, the 65 right now on the downside, it's a lot more riskier than it was, a few minutes ago when we got down there and flew down there really fast, but it stopped and then retested it and then bounced off a 66 area instead of 65. Well, it got down to 575. So technically, the trade is a lot more riskier this time around. If we go back down there, then it was a little bit easier. If you're more risk averse, you are probably not going to take that level. And you would wait for the 60 area on the downside, which is our next support level. All right, market continues to downtick here a little bit. And again, if anybody has any questions, feel free to put them in the chat box area. And now we're kind of, this is like the no trade zone over here. We got right in the middle. 78 is our pivot, so that's a little resistance if we go retest it, but kind of on the downside, really the 65 not going to work anymore, so we're probably looking at 60. Well, I mean, I don't potential entries at support. The market creates the support and resistance areas. I'm not making it up. Just because it's a pivot doesn't necessarily mean it's a support and resistance area. That I could tell you, right? In this situation, it is, but it not necessarily has to be. And it also depends where you're coming from, if you're coming above or below it. So again, the areas that we talk about trading are based on the price action, based on what the market is telling us. I'm not trying to make something up. I always let the market kind of tell me what I should be doing. So if I suggest something or a potential entry point, it's not because I think it's around the pivot or anything. I'm looking at the market and the market's telling me something. And that's what we try to show you. What is the market telling us and how we can take advantage of it if the market, those price action opportunities occur. So that's what we're looking at when we look at these price action opportunities. As far as any potential momentum trades are concerned, those also have to be created by the market. We don't always just fade the market, but we're also kind of the momentum trades that we're going to find have to be created by the market opportunities as well, the market setups. So again, it's not just we're not just looking at support and resistance and using those. We're also looking at potential momentum trades, and those occur once the market sets the price action. So there's both. It's just a matter of patience and waiting for the market to kind of play itself out that way. All right, we're just kind of, this is like I said earlier, it's just kind of like the no trade zone over here. Market just kind of hanging. While the VIX, it does not move the market as much as it is a description of volatility on any given day. The VIX is a volatility index, right? And the volatility index is not created. The VIX is not created by. The VIX is created by volatility in the S&Ps in the stock market. So less volatility, in the market, movement, volume, opportunity, those things are all created in the market, and the market then creates the VIX. So, and volatility moves the market because you get more traders trading, you get the volumes going up. So you need to trade on fundamental news. So you need a few things here to affect the market. The thing is, about more markets go up, they seem to suck all the volatility out of the market because there's this lack of movement. It's one-way trade. Not much is going on. So should we pay more attention to bonds instead? Well, no, you got to pay attention to, sometimes we look at the market, at the bond market, and sometimes it helps us, and sometimes we look at the bond market and there used to be a time where you could look at the bond market and say, okay, well, there's some inverse trade going on. Well, then recently, over the last few months, it was like they're trading in the same direction. Seems like the last couple of days, bond markets are going up, we're going down, but we're not really going down. I mean, we're at all-time highs. So you want to take your cue from the bond market, but I don't think it's, again, trade what the market's giving you in front of you. Don't trade, don't try to rely on something. People always want like an easy way out to trade the market, to trade what you're trading, to lean on something. I would just say, look at the price action, lean on the price action. What's that's telling you? And in that way, you keep yourself, if the price action changes, then they'll be fine. Try not to lean on any indicators. As you can see, I don't have any indicators up here. So it's whatever the market is telling me at that particular moment in time, that's what I'm going to trade. I feel that's the best combination of staying out of trouble and not leaning on something, right? People tend to want to lean on something to give them confidence. I'm saying what gives you confidence in trading our methodology is reasons to trade, different multiple reasons. If you layer in those reasons against a level, then you should feel more confident in trading that level. And what those reasons are dependent on, what we like to show you as far as the price action is concerned, all the work that we do with our education course. So more reasons you have to enter a trade, the more confidence you have in entering the trade versus trying to get another market to try to help you with your entry point. The bond market used to be a good place to look at for help in the S&Ps, but unfortunately, they have gone their own way. All right, the market kind of drifting around here, kind of going nowhere fast. Kind of trying to decide if it wants to go back to the pivot or not. Again, this is a tough area to trade, otherwise known as no trade zone, because really it could do either way. It could rally back. It's not really telling us anything. We could break. We could rally back. We could stay here. It's one of those trades that doesn't give us any indication. So patience is important. The next support level on the downside we have is down at the 60 area, the real good support level, even though the 50 area, the 65 area got kind of triggered by going down to 65.75. So it's a lot more risky right now than it was, the first time it got down there. Settlement price is up here at 71 and a quarter. The market's slowly kind of not really doing anything here, just kind of bouncing around, going nowhere fast. Patience is important here. Again, need to have reasons to trade. When the market gives you a reason to trade, you feel more confidence in that opportunity. Otherwise, right now, it's not much going on. So really, when it goes in this little range play here, there's not too many reasons to trade in this little stuff. Like I said, it can go either way. It could rally back. It could break more. Patience is important. 60 on the downside, next good support level. Again, this basically 65 got triggered when it got down to 575 there. Bonds here on their highs, and they also got dead in the water too. They're just very light volatility, light volume there too. Doesn't really help the volatility index, as they say. As that also gets very, very quiet. Again, volatility is created by a lot of reasons, and volume is one of them. And when there's lack of volume, lack of volatility, also what happens is that you have, as the summer months are here, you get more people are taking vacation. All right, just kind of hanging here. Again, kind of going nowhere fast, but it's okay. Patience is important. Again, like I said, it could go either way here. We could rally, we could break. We have no idea which way it's going to go. Patience is important. Support would be back around the 60 area. Next resistance area right now would probably be around 74, 75. If you're a little aggressive. Now, not every trade, you don't have to, just because there's you have to find the trades that you are comfortable trading. I always keep saying that. You have to understand recognition of the trade is one aspect of trading. And then trading, once you recognize and you understand the dynamics of the trade because you've seen it work in the past, then you can get more confidence in entering your trade. So that is what you have to do here as a trader. Find the trades that you understand, you can visualize, you can see how it sets itself up, and then trade it accordingly. All right, like we said earlier, this seems to be like the no trade zone where the market is just kind of bouncing around. If anybody has any questions, good time to ask. If you put them in the chat box area, I will see them, be able to answer them for you. We like questions. No economic reports today, the rest of the day, but again, this is Friday is unemployment, so that could be a little bit busy towards the end of the week. But again, remember, we did mention that it's also a holiday week, right? Which means the 4th of July weekend. I think we're off on Monday here. And consequently, people are going to be taking off early. So I don't even know how busy we're going to be on Friday, even with unemployment. So keep that in mind as you're trading. That this is going to be a light week as far as volume volatility is concerned, and that's that is always an issue. You need volatility to give you opportunity. Well, we work more on the morning hours, so we start here when the market opens up, and then we go through the morning activity till about 10 or 10:30 Chicago time. So we feel like we have more bang for our money. There's more opportunity there than in those hours than there are, later in the afternoon, especially because during the summertime, you get even less people hanging around later in the afternoon. So it is a problem. Not a problem. It is fact. That's all. So we focus more on the morning hours. We feel like the dynamics of trading for us work better in those hours than they do later in the afternoon. So we'll go here for a couple hours in the morning. Let's see there, Chad. Okay, so basically you're just asking me about fibs, and you took a particular. They do work. I think that you have to pick which ones work. I can't tell you which ones work over. Is the one better than the other? If that's what you're asking me, one level better than the other. If you're going to believe in fibs, then just trade them. Maybe the 68 and those levels probably be a little bit, I don't know if they want to say better for you or not, but it is what it is. So why'd you do this? Since you're bringing them up, so try to see which ones work better for yourself. So kind of keep track of them a little bit for a while and see where it takes you. Yeah, and then go from there. Is one level better than the other? I think that's what you're asking me, long and short of it. I would probably tell you I don't know, and it all depends on the market conditions at any particular moment. So, just keep track of them and see which ones keep coming up, and is it going on the upside, or is it coming back down on the downside? And then see which ones you feel that you can visualize and take advantage of. That's all. It's just another tool to give you confidence in putting on your trades. If it lines up with a level, and if it lines up with one of another, fib or something, if it gives you two reasons to trade, then that's fine. You know what I'm saying? So as long as it helps you with giving you different opportunities to have confidence in your trades. As you can tell here, they've really pulled the plug on this baby. One big move caught us a little long, and then they just missed our entry point on the downside by just that much, and then pulled the plug on us. Kind of unfair. But that's trading, all right? And we just never know when we're going to have opportunities, and we never know when they're going to pull the plug. But right now, because the market is kind of range bound here, kind of going nowhere fast, like we call it a no trade zone, you have to be very patient and wait for the opportunity to present itself. Like I said, right now, a little resistance around the 74 area, but I would keep a tight stop there. And then The downside, probably, you're looking more at 60 on the downside. But really, the 74s, it's not even that strong. So, and really, the better resistance would be up around 678. All right. Yeah, just hanging around. Again, going nowhere fast. Patience is important. All right, well, we've gotten a range bound here, very tight little range. They really sucked all the volatility and volume out of here. So patience is important. They did the same thing in the bond market there. Again, a little resistance up here at 74, but I'm not loving it. Better resistance at 78. And then whatever the situation is, make sure you keep your stop in place. Somebody say something, all of a sudden we're getting a little whipsawed for no reason. But again, that's why you stay out of this, because it's just, just kind of going nowhere fast here. Again, we are definitely at the mercy of volatility, right? We have no control over that. So we have to take the good with the bad, as they say. Support would be the next good support level would be down at the 60 area. That's what we're looking for, is good support. All right, very, very quiet. Bonds upticking, and we seem to be a little bit of pressure with that, though, but we're not making new lows. But bonds continue to be strong here. You would think that because everybody's concerned about inflation and this and that, and interest rates going up, that the bond market would going up would mean it's good for the stock market, right? But that's not really the case right now. But I mean, we never used to like trade together, that's for sure. But now we maybe seem to be going back the other way. I don't know. Who knows? Doesn't matter. They're looking at support and resistance areas, and like I said, we had the 74 area. Anything above 75, you want to be out of any shorts. And downside support would be back at the 60. And in the middle here, kind of chopping around. Hard to get any idea of what it wants to do. We repeat the levels in the chat box area if you still are here. All right. Levels for this morning, we had the pivot at 78. Resistance above at 84, 89, 94, and 4,300. Support below 72, 65, 60, and 54. All right, well, again, this is the no trade zone that we talked about, kind of flopping back and forth here. Kind of going nowhere fast, as they say. Bonds continue to rally on their highs. Not that it means that we're going lower, but I don't know. There was a hint of inverse trade earlier this morning, and maybe that's what's spreading pressure on the stock market. I don't know. But right now, we're stuck in this little no trade zone area. And patience is important. Well, I mean, we could. I don't know how you could say it's bullish or not. I mean, right now it's just bouncing back and forth here, and it seems to be under pressure, but it's holding support at it's found a new support level there at 69. Seems to be holding that. I mean, sidewinding. I don't know how you can say it's bearish. You know what I'm saying? I'm not just saying that it's just going nowhere. It's kind of hard to say it's going one way or the other. I would say that if we get below 68, we could rotate down and go retest the lows. And we get above 75. We did say we had some resistance around 74 there. So if we maybe traded that area, got a little bit off of that level. So, we got to wait to, and then we said anything above 75 out of any short. So if you did trade that 74 area, then maybe scalp that for a little bit. Could we repeat the levels in the chat box area if somebody is doing that? Somebody can do that. If not, I'll repeat the levels. Our pivot this morning is, oh, there they are, but you have to put it to all panelists. I mean, to all, to everyone, just not the panelists. There we go. There they are. Thanks again, Chad. So yeah, I mean, if you waited for a trade there, we had 74 as some resistance, and we said anything above 75 out of any shorts. So that was a kind of a very low risk trade, and it kind of worked out very nicely for you. But we are still range bound here, so I mean, I would still say the same thing if you're going to trade the range. Now you're trading the range on the 74. If we do get it below 68, I think maybe we rotate lower. All right, as you can see, we've come here today. The range still can't get below the 68, and we're just kind of hovering around the 74 area. It seems like the range we're in right now. Below 68s, might go retest the lows. Above 75, you don't want to be short anymore. So, kind of got a little range game here that you're playing, if that's what you feel like doing. So right now, that's what the market is doing anyway. Get above 75, could go and retest some good resistance around 78, which is our pivot. Otherwise, it's just a very tough little trade right here in this little area where it's not really doing anything. It's staying in range. Now, if you're a range trader, you're doing okay with it. Obviously, you got your stop there below 68, so you could have bought at 69 area. And I had nice rotation. And if you're, like I said, if you're a range trader, you got to keep your stops tight, and that way you don't get hurt, and see if we can't get any kind of rotation here. So, you never know when it's going to break out one way or the other, but at least you know where your stops are going to be in place in case that happens if you are going to be a range trader. Anybody have any questions? Good time to ask. Obviously, things have slowed down here quite a bit. So,
Hey, a couple quick shout outs. Hey, Adam K, welcome. Hey, Anupam Carlo, Don J. Hey, Frank. Hey, Francisco, nice talking to you the other day. Just let me know. Let me know if you're hearing everybody okay. Do you have any follow up on our conversation last week? Hey, Frank C, Glenn N, and Glenn M. Hey, Joel, John B, John Z, KP, Kurt, Mark L, Michael S. Hey, Peter O, Prasad, Santino, I reached out to you last week. Did you get my message? Just let me know back in chat. Steve G, Steve P, hey, Tim, and Warren R. Hey, Corey, you still around? Hey, Prasad, do you have any questions about Sol Services? Anybody need trading software? Get set up with trading software to trade the S&P 500 E-mini? That's right. We're here on a daily basis. We start here about 9 a.m. and then go through until about 11:30, quarter of 12. Hey, quick shout out to John B. Hey, John, are you back? Let me know in chat. John B. Santino, let me know if you're back. Prasad, let me know if you're back. Steve G, let me know if you're back. Steve G. Glenn N, let me know if you're back. Glenn N. Francisco, let me know if you're able to hear. Hey, Francisco, it's no problem. If you want to lock in the offer and then pick your start date, you can do that also. And in the meantime, you can come and go as you please based on coming in as Sol's, monthly. Let me know if that works for you, and I can always follow up with you. In other words, join now, pick your start date. That doesn't have to be until you're ready. Take the time off during the summer, but also have the ability to come in when you want before your start date, and that's covered by your payment. So you won't be doing the monthly for the room anymore. That'll be covered in the payment that you make. In other words, as a member of Sol's class and his mentoring service, you get access to this room, for that period of time for free. Sure, when is that? You know what I can do is I can send you out an email and a request, and I'll have the details about what we spoke about in the email. Just put your email down, the best one, and I'll send it out to you today so you have it, and you just do it when you're ready. Okay, great. I'll send it out to you today, and I'll, just let me know that you got it. Take care of it, then I'll cancel the monthly because you've already paid, and that way you'll start saving some money. I appreciate it. Thank you. So I'll send it. I'll work on it in the background now. Steve G, let me know if you're back. John B, let me know if you're back. John B, Glenn N, Frank. Oh, Frank, you're good. Yeah, I think we're good. Thank you. Hey, quick shout out to Francisco. Hey, Francisco, let me know if you're there. I got a quick message for you. Oh, great. Check your Hotmail and let me know if you got it. If you got it, let me know, and then I'll follow up with some more information for you. Hey, Steve G, you back? Santino, let me know if you're back. You might have gone into junk mail or spam. It's coming from Floor Traders Club. Services at floortradersclub.com. And it says Saul's mentoring course. And if anybody else is interested in that, let us know. In your email, those are O's, right? Instead of zeros? I mean, sorry, there's zeros instead of O's. Yeah, no, I put 00. I could try it again. Sometimes it works if I forward it to you. So I'm just going to click on this one, then I'll forward it. Let me know if you get it. And I'll look at the... Let me know if you got that. Let's see here. Let me still... Yeah, it looks like it's going out of the outbox, which is a good sign, right? Let me know if you got that, because I just forwarded it to you. Not a problem. Appreciate it. I'm just going to look to see if I can send it through Gmail. Okay, so I just sent it to the old one via Gmail, and now I'll send it to you to that one. See if I can do that. So I'll forward it to you. Just let me know if you got that one. Oh, you got it. Alrighty then. It looks like Gmail was better than the other one. So, so what I'm thinking is that A, you'll get the price, which is good, and B, once you do this, then I'll cancel the $100 a month one for for the access, because that's included in this. So the sooner the better on your end. And then you can pick your start date. It doesn't matter. And whatever start date it is, then that will be the start date going forward. And then everything will align with that. You'll be fine. But you get the price, you lock it in, you'll be part of the family. And let me know when the payment's done so I can make sure it hit. And I'll let you know. Yeah, that'd be great. Just let me know. I want to make sure you're locked in for everything you want. And this week would be great. And it's funny, I've been doing a lot of that stuff online too. It's amazing how everything's online. No having to go to the bank anymore. Hey, quick shout out to DAHA. Welcome. Just quick sound check. Let us know that you're hearing my voice and seeing our charts. Steve G, let me know if you're back. Santino, let me know if you're back. Hey, thanks for being here. I'll give you a quick overview about what we do based on this service. You're connecting via Zoom to what we call a Zoom trade along. It's focused on the S&P 500 E-mini. We really concentrate on the morning session between the hours of 9 and about 11:30, quarter of 12 Eastern Time. Right now it's 12:14 p.m. Eastern Time on Monday, June 28th, 2021. So this service is for new traders, experienced traders that are looking to develop consistent profitability in their trading. There's a lot that goes on here, both publicly and privately. Publicly, as you hear my voice and Saul's voice when he's on. Saul has a trading strategy that is part of this service. It's a price action strategy. We look to teach you the strategy, how to apply the strategy, how to set the strategy's proprietary scalping levels, and then work through the morning sessions as you're learning to do that and apply it. There's 3 levels of service here. There's guests. You're coming as a guest. Welcome. Get a couple days to get acclimated, see what we're doing, see if this is for you. If you need trading software, let us know. Make sure you put up an S&P 500 E-mini chart. Check out Saul's charts. Next level of service is becoming a subscriber to Saul's service. Usually it's $379 a month. Right now it's on discount at $100 a month. And then you have the opportunity to talk about Saul's course and his mentoring work, where he takes you under his wing and he teaches you his methodology and then supports you as you apply it. As you make good trades, bad trades, in between trades, you have him to bounce the trades off of, get tweaked and adjusted based on your entries, exits, and stops. And that's what we do every day. So if it interests you, stick around, come back tomorrow, set yourself up with an S&P 500 E-mini chart, and we'll be glad to work with you. Very straightforward stuff. Santino, Steve G, let me know. Glenn N, let me know. If I missed anybody, let me know. Thank you. And DAHA, just let me know what you're thinking. And obviously, welcome aboard. It's nice to have you.